outlook that you have as far as India's inflation print is concerned. In fact, joining me on the show along with Rajni is Aditi Nayar. She's the chief economist at ICRA. Thank you very much, Aditi, for your time and speaking to us here on ET now. Now, of course, Rajni is stating that this number, this print for inflation, the CPI print has come. It is along expected lines and it is only going to escalate in the future. Do you hold a similar view given the fact that, there are weak monsoon conditions which are prevailing? There is the possibility of El Nino and, of course, the West Asia war has played up yet again.
No, absolutely. We had actually projected this month's print to come in at 4.3%, so it's a little bit higher than that, not too much. And broadly, food and the full month impact of the petrol and diesel price hikes, these are two of the major reasons that have led to the acceleration in the CPI inflation print between last month and this month. Now, going ahead, definitely these are the two major things that we need to watch out for. First of all, does the West Asia crisis flare up, which we've seen in the last few days, does that really turn back into a full-blown crisis, or, are we going to be in this kind of a stalemate or status quo for some time? And then, of course, how do crude oil prices react? Right now, they're still under $80 per barrel, so, that's something that we need to watch out for. On the monsoon, it's really not been an ideal situation at all so far. We had a slightly, delayed sort of coverage of the monsoon rainfall over the entire country. And as a result, the monsoon deficit in the month of June was quite terrible at 40%. Now, subsequently, we got a huge amount of rainfall in a short period of time. So the rainfall deficit has halved. But this is really not an ideal kind of a turnout. Now, with the current lull in rains, I would expect that sowing will probably surge when we get the next two weekly prints, because with the rains that have happened in early July and the subsequent break in the monsoon, we should expect that sowing is going to go up. But we need to be very watchful of the situation. In terms of the retail prices that are available, we are seeing a slightly sharper hardening in prices for many food items in the first half of July as compared to what we would have seen last year, for instance. So yes, we do expect the CPI inflation to continue hardening.
Absolutely, Aditi, it's a concerning situation. And Rajni, while we talk about the fact that there is going to be, an upward in terms of the inflation trajectory, it will remain elevated. But the question is, for how long will this remain elevated? And what's the worst that you're penciling in?
So the worst we are penciling is in the third quarter. Like I mentioned earlier, it will peak in the third quarter of this fiscal year, when we are expecting CPI inflation to average around 6% or so. After that, we see it inching a little lower in fourth quarter. But overall, going forward, inflationary pressure is going to persist. Like I mentioned earlier, we are looking at average inflation of around 5% or so. The main risk would be, apart from, West Asia crisis and the impact of that on global crude oil prices, like Aditi mentioned, it's very uncertain. Crude oil prices have again reached up to around 78, 80 levels. So we don't know where it's going to stabilize. The other important thing which, the market participants will be looking at is the progress of monsoon. Even while the deficit has reduced, the critical aspect will be as to how is the temporal and spatial distribution of rainfall. And that would have an impact on overall food inflation. Food inflation, we are expecting it to increase to around 7% or so in the third quarter of the fiscal year, from more than 5% reading that we have got for the latest month. We expect it to increase to around 7% or so. More specifically, we will be cautiously looking at vegetable price inflation, pulses inflation, because these are the items which get immediately impacted by poor rainfall. Even though cereal inflation could be under control.
Absolutely, and they have an immediate impact. Right. Right, and they have an immediate impact on the pocket of the consumer as well. So the impact, as you say, is almost immediate. Aditi, let me get in your thoughts on the fact that Rajni is saying that inflation is going to peak in the fourth quarter, and she's averaging that inflation is going to be around 5%. What is your take on that, and how much of the inflationary tendencies that we're expected to see in the next couple of months, they are going to hover around the West Asia war?
Rajni is saying that it will peak in the third quarter, and I agree with her. That's when we expect to see the peak. It's also partly because of the base effect which is there. And from Q4 onward, we will expect to see some moderation in the inflation readings. How quickly the moderation happens will also be reflective of what is the trend in crude oil prices and in food prices between now and then. So it's very much a fluid situation, both for CPI inflation and for GDP growth as well. For instance, between the monsoon and West Asia, I mean, it's equally sort of clouding the outlook for GDP growth. Now, in our view, we are looking at a slightly lower average CPI inflation for FY27, with just sort of shy of 5%, so around 4.8% or thereabouts. But if we get another bad month on the monsoon, for instance, we will also revise our CPI inflation projection upwards. Risks broadly at this point are tilted to the upside.
All right, Aditi and Rajni, let me come to you now. Given that this inflation reading is going to be long-term, is essentially the view that both of you are holding, but will this inflation reading reduce the likelihood of any rate cuts? Is there now a greater possibility of a rate hike if inflation remains elevated like the two of you say?
Actually, the situation is very fluid, and that's what the central bank has also been indicating. They have not given any indication of, how they are likely to move going forward. In the upcoming meeting, we are of the view that they are going to maintain status quo. After going forward, their action is going to be very data dependent, depending on how the growth and inflation situation pans out. Because globally also, if you see the global other central banks also, they are being very cautious and they are not giving very clear indication of what their action is going to be. Because they don't want to get bound by that. Depending on what kind of data comes, because the situation is so fluid, you don't know how the West Asia crisis is going to pan out, where crude oil prices will stabilize. Even on the monsoon front, we know that yes, weak monsoon will have an impact on food inflation, but we don't know how bad will the monsoon be. So given that we have all these uncertainties, I think RBI is going to wait and watch. In the upcoming meeting, we think the central bank is just going to maintain status quo. But going forward, the action will be more dependent on the data. I would say rate cut, the chances are low. In fact, there are chances of a rate hike if inflationary pressure aggravates further.
Right, and we have time for one final question. I'll take that question to Aditi. Aditi, what's your reading on what the RBI policy is going to undertake at the next MPC? And secondly, what is your estimate of how this is going to impact India's GDP reading for this fiscal? Of course, we've heard economists talk about the fact that, of course, due to the West Asia crisis, the growth trajectory is going to remain anywhere between 6.5% to 7%. Would you agree with that? Do you think we're going to be maintaining that sort of a growth trajectory?
As far as the MPC is concerned, I agree with Rajni that we're likely to get a status quo policy in August. I think a rate cut is off the table now. I don't really see a rate cut coming in the rest of this fiscal year. And rate hike, if at all, would be back-ended. We are probably going to see a continued caution from the RBI, from the MPC, until there are very clear signs that there is a generalization of inflationary pressures in the economy. Only after that is visible would we expect the MPC to start tilting toward a rate hike. So as of now, we are expecting a status quo in August. If at all the monsoon turns out to be much more dire than what we are hoping, then maybe we could get a stance change in October and a potential rate hike in December. We're not really expecting anything earlier than that at this point in time. So that's kind of the timeline that we're seeing for MPC action. On the GDP growth side, we're getting bits of information which turn out to be a little positive, and then something else comes in which is a little more negative. It's really hard to call in terms of what the GDP growth will look like in this fiscal year, given the kind of uncertainty we have from West Asia and from the monsoon. It's probably going to be centered somewhere around that 6.5% mark. So maybe between 6.2 to 6.7%. That's the kind of number that we can look forward to, depending, of course, on how the monsoon and the West Asia crisis turn out.
Absolutely. Thank you very much, Aditi and Rajni, for taking the time out and speaking to us here on ET Now on the state of the economy. And of course, how do you really see growth going forward, India's inflation trajectory going forward? And of course, the two of you state that the worst is not over yet. Once again, thank you very much for joining us here on ET Now, Aditi and Rajni.